The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. Good to be back. Sorry, I was out on Friday. Something came up suddenly, but I'm back here. And of course, Friday was a 390-something point smash to the downside. Let's just run the numbers. And before I do that, I always forget, so I'll do this right now. There's the E-mini. The E-mini went down this morning. Actually, last night was very interesting. So the market closes on the 11th with the E-mini. This is a 10-minute chart, going down to 2107 round number. What is very interesting, there was a very flat sideways movement, making a little bit of a peak A, and then a peak B, and then a peak C, and a peak D, and it pops up to about the 17 to 15 area. Pulls back suddenly, early this morning, has a bounce, and then pulls back yet again and retests and goes all the way sideways, never breaking the 2107 low that was made at the close on Friday. Even that low that was made right there is 2107, double bottom. Retest just a tad above at 2107.25, and then starts a beautiful peak A, B, C, a nice cup, more like a bowl formation, goes to a D, and this is a potential for a Chapman wave instant restart, but I'm still calling it E, and we've just gone to a leg F. I could call it F/B. One of the reasons why I'm going to keep it as an F for now is that it's very close to the left side, right side price time match. What I mean by that, around about 2 o'clock on the 10th, there was a move towards the 2140s, and that's where we started on our way down. And then what we're looking at is a test today of a high of 2137. So we're almost there. That is an extraordinary move back to the upside when you've been going sideways in all this time. Very negative news. Foreign markets, of course, closed down sharply. And then as always, the Dow surprises and pops to the upside. So here we are. That's the 10-minute chart. Let me make it real clear. 2137 to 2140 should be very strong resistance, unless it's just a brand new a trigger for a buy. I'll talk about that in a moment. That is a short-term buy signal in the smaller, let's call them the smaller time frames. And on the downside, sliding now about 7 points lower, maybe to the 27s, says, be real careful. We're not out of the woods. And now I can go down to the story here. The Dow is up 51. Had a low of 18,085. What is that? That is, in fact, 600 points off the top that was made just on the 15th. Very quick. Took out, you remember I was talking about this right here. That sideways move, that a rectangle formation can last a lot longer than your patience. Then I spent quite a bit of time discussing, let me just get rid of this here. Put it lower down. That's the 120-minute chart. And what I discussed was there are a whole bunch of reasons why we went to a sell signal, and we were short the Dow in a number of positions, and we're being short and adding to the short side over the last week. A major reason was in the Chapman wave, we went to this pattern that I call a right arm extension. We went to a peak E at 18,688. When the MACD was just fading horribly, the stochastic was fading horribly. And if you recall, I'm going to put this up here, and I'm going to go to the ES. I hope it's back again just like I wanted it. Right here at ES. And look at this. That rectangle formation just lasted forever. And I'd say this is one of the tightest ranges I've seen. In fact, historically, it was one of the tightest ranges ever. Percentage-wise, and in fact, it goes back to 1928. And as I'm looking at this, and I'm looking at all these different, these key icons that you don't even know are going to appear, and you're not even thinking of them. I'm like, who would think that I'd be looking at an icon from 1928 of the narrowest trading range? I'm also looking for an icon that says we're going to have a 12 to a 15% correction before the coda section continues to the upside. We'll see. Is this the one? Well, a lot of evidence suggests that it could be, but it doesn't have to be. So let's get out of this because I want to actually show you something else, and that is in the Dow IND. These are the parameters to watch. It's real simple. There's this base of support. I've drawn it in for subscribers over the weekend, which went to the 18,016 level from the 6th of June. We gave all that back by sneaking under it on Friday. And now the weight of the evidence suggests that the MACD and stochastic are still not ready for anything other than bounces. There's a dash trend line that I call the Chapman wave inside wedge target line. It went under it on Friday, smashed through it, in fact. And that makes 18,150s to 18,190s very strong resistance over the coming day or two. The downside, because of this, I have to jump to it, because of the VIX index. Oh, so let me finish up. I remember on Thursday I was discussing the head and shoulders pattern in the Dow 120-minute chart. I spent a lot of time on this. It's this pattern right here. I said, look, shoulder, head, shoulder, typed it in. I made a big thing for my subscribers. Another reason why we had added to the short side. And I drew this dashed line across, showed them over the weekend. And that the low that we saw was 18,085. And I said 18,000 is about the level. 18,002 was actually one of the levels that we were looking at as key support today. We went just under it. We went to 17,994. And it's saying that there's a lot of downside pressure, but more importantly, the upside is very limited. That's the 120-minute chart. Let's get out of that. We're running the numbers now, and I'll do it together with the charts. And I'm looking, and the weekly chart over the weekend, I said, I'm putting in a down arrow. Technically, it's a sell signal. I should say sell mode, but not until the stochastic goes under 80% and the MACD crosses quite sharply. And I actually need that on a closing basis. It's already done it. That's not good enough. S&P is up 7 to 2134. It slumped this morning to a low of 2119. And there's that weekly chart. I didn't put the down arrow in, but I should have, because everything about it with the closing under the 9-period moving average. Technically, the down arrow should imply a sell mode, but in this case, I've made it very clear that the stochastic and MACD have to deteriorate quite a bit by Friday. So there's a little anticipation. The monthly chart, both the Dow and the S&P are still good. Let me quickly run this. QQQ series, holding way better than the others, and even bouncing very strongly today. Sell mode in the daily, but so far I haven't been able to put anything into the weekly because it's held so well. I'll run the others in a moment, but I'm first going to go to gold. Gold is down $7. It's within this higher consolidation a mode. I don't really have a signal other than the weekly is about to go to a sell signal, but it hasn't yet. The daily is in a sell mode. Let's go to the dollar DXY, and then we'll talk about bonds and crude oil. Nothing much happening in the dollar crude oil. Crude oil was pulling back before. Now it's got a little bit of a bounce. It's in a trading band, and the TLT is really important. We need to talk about that a little later on, but the weekly has gone to a sell mode. That's going to be very important. Basil Chapman, I'll be back in a moment. Dow is up 38, S&P is up 7.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC. C.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So we're back with question here. How did you actually, Basil? How did you actually get the sell signal? Okay. I thought I'd gone through that, but let me just. Here we go. Let me just do that again then. Normally what I look for, well, I like to look at time frames. So I was getting it basically from the 120-minute chart, but also there were other factors involved. And I just want to move this so I can get the right one. Oh, I'll just go here. In the Dow chart, and if any of you have been listening or been subscribers for a long time, you know, I follow this very closely. And I try my very best to get us into a short position, at least an initial short position, either a D or an E in the Chapman wave. What does that mean, D and E? I guess that was the question. All right, let me just do this. While that's coming up, I'm just going to get the Dow chart up here, and I'll explain what I'm looking for. I look for divergences, and if I'm starting to see divergences, then the next very best thing that I can do is to try to find, to have the patience to wait for the letter D. What is letter D? It's right. Hey, I didn't get rid of it, did I? I can't believe it. All these charts. Here we go. Let's try it one more time. Getting it. I'm getting it. I'm not getting it. I'm not getting it. Is that everything? No. Well, I shouldn't have lost the chart. All right, I'll find it during the next break. But in the meantime, I'll be looking. If you know what I'm looking for that very clear drawing of a trend line up, a trend line down, and that continues until you get to the fourth highest peak. What is the fourth highest peak? Let's just say right here we've got the low of 15,415 in the weekly chart, January the 22nd. I look for 4 higher peaks. That's peak A right there. The weekly chart of the week of the 5th of February is 16,510, pulls back, that makes it a peak. Then it starts leg B. A moment it goes 1 penny above 16,510.98. At 10.99, it starts leg B. That's called the floating ladder. And it continues higher until such time as it actually makes a peak. When it makes a peak, I call it peak B. And that was a little peak right there at 17,811.48. Next day, next week is 17,806.38, just slightly low, but that makes a peak. The moment it went above that B, it starts leg C. That leg C continues. It's a floating ladder until it makes a peak. It made a 17.5% increase in price. Went to 18,167 from the bottom, from that January bottom. Pulls back quite sharply, and then this is the difference between many of the techniques of mine. Mine's counter the peaks. That peak C could pull all the way back as long as it doesn't break the low, and then go on, and I have to consider that that's a D when it breaks out above 18,167. And then it went quickly from a D to an E. And I'm always watching that. I don't know why my throat gets so scratchy when I'm talking like this. At 18,668, I got a peak E. And this is that pattern that I normally would call the double camel hump. That is, some camels have one hump, some have two. And this very much looks like the double stochastic M pattern. So it ran up above 80%, and then it started to fail. And that was at that peak E. So we went short the day after D, right there on the 12th, at about 18,580. The high was 100 points high at 18,688. We didn't get stopped out, and we've been short, and we added on the 3 times short, we added a small position there. So that's I hope that explains my thinking, that the technicals were fading terribly. It was only a matter of time before it got dragged a little bit lower. But price is the arbiter of a trend, and that can keep going higher. So the reason why I set it in place with a stop is because if there was a close above 18,688, I had to consider it was recycling. That could become C, and then you'd get a D. So just for me, it was very simple, and hopefully for my subscribers, we treated it just as the normal thing that we would be doing under circumstances that favored, for once, it just favored what we were doing. Okay. Let's continue. So now I've got... I'm looking at the MACD in the Dow weekly chart crossing negative, but it's like first not even 2 hours of the first trading day of the week. So I can only say that if by Friday the Dow closes decisively under 18,283 with a 9-period exponential moving average, there's a real good chance that I will be going to a sell mode in the weekly. At this point, it's got an action of a down arrow that suggests it, but I've made it very clear in my articulation over the weekend and all the different 8, 9, 10 charts, whatever it is I sent out, that's what we're looking for, and that the MACD held nicely, but even though it crossed negative, but the stochastic was pulling back, but still hadn't gone under 80%. Now it's a penny under 80%. I like over 80% because that's good. Under 80% makes me a little nervous, and deeply under 80% is not good. So this is where we are. All right. Now let's continue. And the monthly chart has got a pattern that says there's a good chance there's going to be a peak C, that there will be no new high in September above 18,688. That's what it's looking like. I have to let the chart tell me. Hope that just quickly explains it. Let's go to crude oil. So crude oil right now is, let me just refresh over there. So crude oil is just in this trading range. And I said that I think crude oil could trade between 48s and 43s, maybe even 42s, a little while longer. The weekly chart is still holding quite well, but I just didn't see that crude oil was going to break to the upside, and that's really the question. It's not so much how much down it goes, although people did ask should they short it, and I'm just saying maybe yes, because the market is showing a lot of weakness, but at the same time, I think that they're diverging. There's a little separation now between crude oil and the general market. Okay. Now, let's go to Greg in Austin, because we can go to another area in the commodities, which is very important. Greg, how are you?
Well, thank you. How are you, Basil?
I'm very well, thank you.
Great. Hey, I'm in UGAS, but I really try and follow the UNG and the natural gas contract, but I'm not sure if how last time I called in on natural gas contract, the charts that I use weren't all that great. So I'm not sure about the count that I have, your wave count. And so I was hoping that you go over that. And the other thing that I'm looking at is that on the UNG, it's finally broken through yet again for the third time on the daily chart through the 200 EMA. And
yes.
So if it stays over that, I'm great. If not, I'm going to jump out of the UGAS. But so I wanted your take on that, if you would.
So
please.
First of all, Greg, you've actually done a really nice analysis. You've almost saved me doing the analysis, because I think that's pretty much what you've articulated is what I'm articulating. There's just one thing that I wanted to put in here because it has to do with patterns. And the pattern I'm looking at, I'm talking while I'm doing it, so give me one moment so I'm not going to make a mistake. I'll make that green, and you'll see that there's a pattern that I often do, and I call it the cup formation. Let me just make this. I want space to the right, another little bit more. Let's make it 10 for now. There you are. So now what I can do is I can show you that there's a really nice cup formation that's forming. It was actually not looking that great on the 7th when UNG, which is United States Natural Gas Fund, was down and in the 784 area. And now it's at 854, and all of a sudden looks like it will make that leg D. So there's nothing to jump in right now to say, hey, before the break, quickly get out or get in. I think you've done your analysis. Hold on, if you don't mind, and we'll do it in detail when we get back. Do you mind holding?
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Dow's up 47. S&P's up 9. It's pretty good there. And we're on right this moment with Greg in Austin, Texas. We're looking at UNG, which is the United States Natural Gas Fund. Monthly chart is just starting to improve, but doesn't really look great if you look at it from the 27s going down to the 5s, 6s, trading at 8.56 with a really nice percentage gain from the low of 578 made back in, I think it was March. So this is what we're looking at. You've done the analysis correctly. What I don't know if you did if you identify there was a cup formation forming, if I take the low from the high of 887 that was made on, was it July the 2nd, July the 1st? Yeah, July the 1st, pulls back to a low of 755 on the 11th. I'm using that as a left side, right side price time match. And it's a little, I normally would want to see going out a little bit further to the right because, gosh, this only has today 1, 2, 3, 4, 5, 6. Oh, no, it's good. It goes into next week. And it has a chance that by next week, if it can hold, and you were correct, I got $8.39 as a 200 period moving average. I'd probably say to you 826, the 9 period is a little bit more important than the 200 because it can pull back under the 200 and then bounce above it. Use the 9 EMA as a springboard. I love the action right now. It's up 36 cents. Can I just ask you, what made you go long? Is it something you've been watching for a long time and you just have a good feeling for the trend movements, or was there a technical picture? How come you actually chose to go long? Because it was a really nice entrance.
Well, partly because of Andy Hecht, and I think that seasonally, natural gas, this is where it starts to turn up, and it had that, a great move from from May up into July. So yeah, I've just been, I missed. I got part of a long move back in August for a little bit, and I was waiting for another entry. Probably could have gone in a lot better than what I did, but I'm in, and I'm waiting for it to break out. Hopefully, I don't know, for another large move like it did from May through
right, and actually that
July,
percentage,
Andy
on percentage
indicating
basis.
that there, if we get above these levels, that there would be lots of shorts covering. So we'll see.
Okay, well, I like yours and I like Andy's analysis very much. And I'll tell you what is very important about this. Hello, can you hear me? Are you still there? I hope so. I'm not sure. Hello, I'm here. Greg, can you hear me? Well, that's a shame. All right, well, I'm going on, and you'll probably hear me in the archive. So let me just do this, or if you can hold on, if my engineer can just tell you that I'm talking and that I'll continue, maybe you can come right back in. So most importantly, I just want to say for anyone listening that Greg is in the right position. Yes, there is resistance. The big thing will be if UNG at 856 right now can go above 866, because that'll go to a leg D. But I want this leg D to go above 887. I want it to be almost like an Chapman wave overlapping wave. So that'll be saying to me that the 8 area that we're in right now, the 850s, is really going to become support. That's going to be very important. And even more important than that, the UNG seasonally, I might be wrong, but if I recollect, this is the season when natural gas should be strong. If that's the case, you've got seasonality. I'm just looking at the MACD, the moving average convergence in the weekly chart says to me that so far the bias has to be towards the upside. So yes, Greg, I love the position, and I'm just going to say to you, give me a call if you see it come below 826, because then we need to do an assessment of whether it's just a rectangle formation or if it's this very powerful weekly cup formation that says I'm going to go right through the 927 level in the next 3 weeks, and I'm going to treat this rally as the second leg up, the third leg up in the weekly chart as a leg C, and that's going to be very important. So yes, I hope in the archive you'll be able to listen. Greg, hold your position. I like it. And I'm only saying to you, maybe 20 cents, 30 cents lower. Just let's have a look at it together. But at this point, I think it's going to go directly to leg D, and that's going to be above 866. Hope that helps you. Thank you for calling. So I'm going to continue. And I want you to, I said I'd go to the TLT. Look at this TLT. The TLT is the 20-year iShare Treasury Bond ETF. It broke all the support, and now it's got it has a pattern that says in the daily that it is going to go to a channel low. And that channel low support is in two measures, very important. It's at 135.37, down 15 cents. Now, if instead of bouncing in the next day or two into the 136.80, 137.30 area to try to fill the gap, it pulls back further, and the weekly and the monthly are not, the weekly and the daily are not that good. Monthly is still pretty good. I'm looking at this and I'm saying, this is the trend line to hold 134. A close out of 134 immediately says that the 200-period moving average of 132.70, which would coincide with that very strong down candle of the 23rd of June at 132.08, it says that this is going to be an area, 132s, that's absolutely imperative to hold. So that's the way we're looking at it. I'm going to just grab this 10-minute chart here because I want to see how it's acting. Yep. So this is a recycle. It's in a new leg C. That was an instant restart. My target now would be for the E-mini, at least to attempt, if it hasn't done it already, to get to the 21.41.25 area. High so far is 21.38. So it's got about 2-3 points, and it's got until 12.20 to get to that level. That would be the beautiful Chapman Wave inside wedge target line. It would be two target lines, actually, and it would be the left side, right side price time match, a whole bunch of things going on. And where did I choose my plumb line? I chose this little doji candle right there. I did it way before it was actually moving up into this area, and it just seemed to me that that matched my inside wedge target line. So we'll see what happens, right? Now, I said I'd look at that. I want you to look at the, I'm going to go to the TNX. This is the 10-year, and I'm going to look at the wrong place. Always tap over there. TNX, there it is, TNX, and we're looking at a breakout in the yield. This breakout now goes to leg C in the weekly. Remember, we were looking at this, it was in leg B, the leg B in the 30-year in the weekly. I showed this to my subscribers over the weekend. Let me just see if I can get to it right now. Let me get out of this here. Look at, this is the Chapman Wave support and resistance lines. This is a tool, an automatic tool. 211.866 was the SPY support, and today's low is, let's see if I can get it here quickly, was 21231. So it was slightly above, and that was in the daily chart. And then you've got a bunch of things going on. Now we've just about hit resistance at 214.59. I have it in 2 time frames. We'll see what happens there. So, okay, now I'm going to get out of this because what I want to show you when we come back is my triple yield chart. So I'm going to say exit, close the workspace. We're doing that. Dow's up 68. Oops, nice rebound. And let's go to this, and I'll be back with it fresh, and I'll show you the Chapman Wave Peak D. I'll draw it up again. I'll be right back. Basil Chapman, Tiger Technicians Hour.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Let me just finish this up here. I'm just going to do that. A lot of people ask the question about, well, what exactly is this Chapman wave all about? Well, the basic structure of it is, if I could just grab that, swing it over there. The basic structure is that you identify the lowest low bar, and from there onwards, you just merely count each successively higher peak as alphabet sequentially peak A, peak B, C, and D. When you get to D, I always put a plus sign because other things can happen at D. It could pull back very sharply. It could negate the whole thing. That's where you can get the sharpest and longest decline. It could be short, and there could be another little bounce up, and that bounce, oops, where did that go? And that little bounce could just go above that peak D, and that could be a recycle, brand new E, or, an extension D goes to E, the next highest peak, or it recycles. And then I put a circle like this saying there's a Chapman, if conditions are met, it could be a Chapman wave instant restart. And that says not only could you go to a new peak E/A, but that could be F/B, G/C, and then a D. And then you often, when you get the recycle to a D, it even goes to an E and an F. It is really a powerful technique and an indicator. So that's the reason why when we went in the Dow, right here, when we went in the daily chart, look at how many dailies here, okay, daily, that is the 120. When we went to this particular one right here, D, and then we went short after D, and then there was an E because it was just so small, and there was a chance of a deflection lower in the MACD and the stochastic, but it turned out to be a peak. What in the 120-minute chart? It was a spike, right shoulder move to a peak F, and then it pulled back. It said to me, I've got a lot more confidence in this. So that's the technique, and now you can see the technique is so important. Why? Because we've got weekly charts that are, let me move this one away. Right there. I'm just going to move it away so I don't forget about it because I want to use it. And now the TNX went to the D, but that's different. The MACD and stochastic are holding very well. Stochastic did pull back. Look at the way the MACD held very nicely. So this has the chance now to be either a recycled brand new A or an old E. So I put the two together, because the MACD is still strong. Stochastics is that aberration of a sudden move up, could be a sudden move down as well. So what happens, especially with the doji candle here on the daily, we'll watch this all week to see if there's going to be a doji candle, say, pulling back after this, or this is just a clue to say the MACD and stochastic in the weekly of the 10-year Treasury note interest rate, the yield, is becoming more powerful. So this is very important. And not only that, on Friday, Thursday and Friday, the yields did what the Fed has been wanting to do, but hasn't. So there are a lot of things going on. I've made a big deal about in this particular period, how the commodities, what are they going to be telling us? Are they telling us that there's a rotation into the commodities? I suggested that there was a timeout, and this timeout could last a little bit longer. One of the reasons why we didn't buy a particular ETN, something that has gold, silver, has gold, copper, zinc, it has just a whole bunch of the commodities in it. The reason why it hit exactly the price that we wanted on the way on the pullback, and I didn't want it, is because even like this chart, the chart itself is suggesting that the commodities are not quite done consolidating. It doesn't mean to say they have to go much deeper than the 400. In this case, it's at 419. This is the Reuters. The Reuters equal weight. I want to give you the exact title because it was Thomson Reuters. Thomson Reuters Continuous Commodity Index Monthly. This is the one with the Chapman wave notations. And look what it's done, all the way from 690 down to 351. And at this point, it's 418. Had a very nice bounce and is pulling back. So this is going to be very important. So I decided we wouldn't get, although it's done very nicely this morning, we would have had it at a perfect buy at $14.55. It's trading now at $14.70. Instead, I decided to go with a stock that was also very low priced, even lower price. We bought that at $8.22 this morning. I waited patiently for it, and it's trading now at $8.53. So it's up 21 cents. But this is one of those days where you really have to say the day is young. Anything can happen. So I'm trying to just be very selectively long. Basically, we've been looking at shorts, and we've had some very nice short positions. We'll see what happens. As I say, this is a very important. Last week was a really important week. This is the week whether you see follow through or not. I was going to say I didn't do my political thing that I was commentary I was going to do on Friday. I was going to do it today. I don't want to waste time. This is a period where almost always you see the candidates getting closer and closer together in percentages. But there are things that are happening here that are really important. I hope I can find time tomorrow to do it. So I want to go to the very next thing. So that's commodities. We just did the yields, and I wanted to show you here what happened to the yield. We've gone to leg B now in the weekly chart of the TYX, that's the 30-year. We've gone to leg C now in the 10-year, and we haven't yet gone to leg B in the 5-year, which is at 12.28. And that's going to be two things are very important here. One is this is just such a pathetic little rally. If you're looking at it historically, believe me, pathetic rallies can lead into really strong moves to the upside. At this particular point, it's real clear to me. We've already gone peak A, peak B, peak C in the 10-year. That's a very quick move with not that much in price. It is a percentage move. It's big, but if you're looking at the chart, it's really not a big move. Look, there's this little brown one. The low was 13.36, right there, 13.36. And the high today is, or whatever it is, the high today is 16.96. So believe me, 3 points in a $13 stock, that's a lot of percentage. But if you're putting it into the context of where we've been. So I'm watching this really closely because if the yields stall this week and the TLT can find support, this is going to be such a fascinating period because the Fed is going to be looking at this and saying, whoa, 400 points. Do we want to be responsible for 1,400 points in 2 days? You know, the way it could happen if they suddenly start making announcements. I think this is going to be a really interesting period because we're looking at the political, the social. I am going to put this down arrow in. I should have put it in over the weekend. I forgot. Down arrow right here. So we're in sell mode. We're still in sell mode in the TLT. That doesn't mean to say that because you're in sell mode, it's going to keep going down, down, down. It just says the trend has moved, the trend is down, the MACD is down, the stochastic's down. Finding support is going to be very interesting, and you'll see that whole 132 area is going to be really, 133, 132, well, it's going to be really important. So this could be doing the Fed's work for it. At the same time, we've seen these moves before. We just have to see how the week on Friday at 4 o'clock, how we close. So there were a couple of questions in the den. Let me get to them. IBB, yes, sure. IBB, we didn't take any position. We've had really nice positions before. I didn't want to do. I'm still looking at. Oh, there it is. Look, it's up $6.20 at 284. I still feel very strongly that fund managers, they don't really have a choice, and this is really fascinating. As I'm looking, I get this email. This is from Greg. Greg says, thanks for all your help. Cell phone glitch, not a Samsung. So I'm okay. Hey, my Samsung, the replacement is on its way. The Samsung 7. This is not the one that's being recalled. This is the one, my battery is horrible, and it just does terrible things. That's what I'm saying about Samsung. Hopefully the new one will be an improvement. I'll be back.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge show heard daily here at TFNN.com. On Wednesday, September 14th at 5 p.m., I'll be hosting a special one-hour event, The Ultimate Reversal Patterns. I'll teach subscribers how to identify and trade market tops and bottoms. You'll learn Tom DeMark's TD setup, TD sequential, and TD combo. Plus, I'll show you how to identify Gartley buy and sell patterns, which means you'll learn how to master the D point of any A to B equals CD pattern. More importantly, I'll teach you the most powerful pattern of all, by price relative strength divergent pattern. These patterns work for stocks, for ETFs, future contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes Wednesday's Ultimate Reversal Patterns webinar. This $49 offer is only good through September 14th, so act now. At only $49 for your first month, I guarantee this is an investment that you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
I've got a whole bunch of questions, so let's just do this. Let me get back to that Samsung. Yeah, I got the Galaxy 7. It's not the one that's being recalled because of the battery, but the battery does get very hot. And the guy on the phone that I spent hours and hours and hours and hours with, and I've had it for about 2 months, and I've been to the different stores to get it, the different things fixed. It goes straight from phone to answering. You don't hear a thing. It just goes straight. And I've read about this. People have had that problem. So, and I know it's a fantastic phone. The camera's amazing and all that, but it's just not doing what I want from a phone, although the sound is way better than my other Droid one. And I was reluctant to get it because I don't do all that much on the cell phone. But anyway, I did, and now it's being replaced because Sunday the final call came in yesterday, and he said, okay, done. It's on its way. We're shipping the new one. Why don't I go to the iPhone? Because I've had these other instruments before, and the Apple actually I don't feel calm. My wife has it. She loves it. I'm not comfortable with it. That's the way it is. But anyway, I'm just grumbling because it's a problem that shouldn't have happened. It was a brand new phone, and anyway, they're replacing it. So here we go. The VIX index. VIX is in leg D. You see, this is the thing that I say to subscribers. Be a little careful here because we're in leg D. Although it's leg C in the 120-minute chart, leg D is really important in the weekly, and we could have maybe one pop to the upside or something. I just don't have it. Do I have it? Yeah, there it is. So that was leg C, and it failed at C because it's pulling back. So I have to respect that it's gone from a high today of 20.51. The VIX is at 16.47 right now. That's how quickly the VIX can. I think that move on Friday was at least 180 to 220 points more than I think it should have been normally. And that's what happened. So the VIX just screamed from the 11s on Wednesday, Thursday, Friday. No, when on Thursday it was in the 1165 area, and look at this. It goes a massive move, almost a double. That's incredible, 100% gain. So yeah, it's pulling back very sharp here, and that's saying to me we've got some stability here. Don't think it's all over. The market is done. I do think that we're looking at signal to sell mode and choppy. Limited upside, a little bit more downside, and there's going to be a couple of surprises to the downside. That's the way I'm looking at it. That's what the stocks seem to be saying. So that's that. Next question is that we're not done yet? Good. The VIX index we've done on the daily. The weekly chart is just a spike up. It's now just a tad under the 200-period moving average. And the monthly is, how can I talk about the monthly? Monthly is the monthly. It spiked above the 200-period moving average, and now it's way below it. So we'll talk about that. In the meantime, make it simple. At 1648, if by the end of the day you see the VIX start to climb into the 1720s, that means you've made it a high for the day and you're starting to pull back and consolidate. If it starts to pull back further into the 15s, you'll see the market go up about 130 points in the Dow and about 18 points in the S&P. That's going to be very interesting. Now, what I want you to do is this, as we're going at, I want you to show you. Remember GE, I was saying not good. It's got almost like a one-to-one, but it doesn't have to have the one-to-one to the downside. I call it the Chapman wave propeller shaft. And it has had a spectacular move to the downside from 32.95 to the low today of 29.84. So that's 3 points. And I say spectacular? What are you talking about, 10%? No, it's spectacular because of the chart formation. Look at that beautiful fulcrum in the middle there. Treated as resistance and as a springboard to the move down. And now we're going to see a little bit of a bounce in GM probably. But it's saying to me so far the monthly is still okay. Not great, but it's okay. Weekly is looking like it's sell mode. And I've got the down arrow. I think there's going to be a little more choppiness to the downside in GE. IBM, as we're about to wrap up. IBM, nice move on the day, but it's also in a sell mode in the weekly. Triple M, this is my Dow quartet. Big move to the downside, made a peak C, needs to still go to a D, but it's going to take a little bit of work. And UTX, whoa, on the 200-period moving average in the daily, I think it's going from 103 to the 99s over a period of a couple of weeks to test the 200-period moving average. And then maybe it's going to tell us we're ready for another big move to the upside. Dow up 71, Basil Chapman, check out my opening call. I'll be back tomorrow. Have a great day. And
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN. TFNN.